What if the bedrock of America's global power wasn't its military, but its money? And what if, right now, that bedrock is starting to crack? For half a century, a quiet agreement has made the world dangerously dependent on the US dollar for its most vital commodity, oil. This is the petrodollar system, and it has been the master key to American economic dominance. But today, a quiet, coordinated challenge is rising from the boardrooms of Shanghai to the oil fields of Saudi Arabia. China is using its massive appetite for energy to build a new system, one where the dollar is no longer king. In this video, we'll pull back the curtain on the deal that created the petrodollar, break down China's strategy to dismantle it piece by piece, and explore what a world with a rising petro-yuan could mean for your wallet and for the balance of global power. Section 1. The Deal of the Century, Birth of the Petrodollar. To understand the financial battle raging today, we have to rewind the clock to the 1970s. The global economy was in chaos. President Nixon had just cut the US dollar's last tie to gold, shattering the system that had stabilized the world since World War II. With the gold guarantee gone, what would stop the world from abandoning the dollar? The answer wasn't a law, it was a handshake, and the commodity wasn't gold, it was oil. In a series of history-making negotiations, the US struck a deal with Saudi Arabia, the world's oil kingpin. The arrangement was a masterstroke of geopolitical pragmatism. In exchange for American military hardware and security guarantees, the Saudis would price their oil exports in US dollars. Crucially, they would also invest a large chunk of their oil profits back into US government bonds. Soon, other OPEC nations followed suit, and a convention was born. This created a permanent, artificial demand for American currency. Any country that needed to buy oil, which was pretty much every country, first had to get its hands on US dollars. Central banks worldwide had to stockpile dollars just to keep their economies running. The petrodollar system gave the United States extraordinary power, a relentless global demand for its currency, a huge captive market for its government debt, and the ability to buy the world's most critical resource with money it could simply print. It was this financial architecture, more than any aircraft carrier, that cemented America's superpower status for the next 50 years. But no system lasts forever. And the first real challenge would come from the one country that needed more oil than any other, China. Section 2. The challenger emerges. For decades, China played by the rules of the dollar-dominated world. But as it transformed into the world's factory, its thirst for energy became unquenchable. Today, China is the world's largest crude oil importer, with data from 2024 showing that the Middle East and Russia together supply nearly 3/4 of its needs. This created a massive strategic vulnerability. China's economic lifeblood depended on a financial system controlled by its main geopolitical rival. This weakness became painfully clear as the US began to weaponize the dollar by controlling the plumbing of global finance. Washington could cut entire nations off from the world economy. For countries like Russia and Iran, both key energy suppliers to China, sanctions weren't just a threat, they were a painful reality. Seeing this, Beijing realized its dependence on the dollar was a fatal flaw. The ambition to break free is no state secret. President Xi Jinping has openly called for China to become a financial powerhouse and to build an economic order that reflects new global realities. The primary battleground for this new order is the global oil market, the weapon of choice, the petro-yuan. Section 3. The Petroan Alliance. China's strategy isn't just a theory, it's unfolding right now through a series of calculated moves with key partners who are just as eager to find an escape from the dollar. The most important partner is Russia. Since facing Western sanctions, Moscow has rewired its energy economy toward Asia. Today, Russia is China's single largest source of crude oil. By late 2024, Russian officials reported that over 95% of their bilateral trade with China was being settled in either the yuan or the ruble. This isn't a small experiment. It's a multi-billion-dollar economic bloc operating almost entirely outside of the dollar system. The second critical partner is Iran. Under crushing US sanctions, Iran has found an economic lifeline in China. An estimated 90% of Iran's total oil exports now end up in China, often routed discreetly through other countries to hide their origin. This trade is a clear win-win. China gets discounted oil, and Iran gets to bypass the US financial system by accepting payments in yuan. And it, not just Russia and Iran, from Venezuela to Indonesia, more countries are starting to settle parts of their trade with China in renminbi. President Xi has even publicly called on Gulf nations at a summit in Saudi Arabia to conduct their oil and gas sales in yuan. China is methodically building a coalition of nations for whom yuan-based trade isn't just an economic choice, but a strategic imperative. Section 4. building a parallel universe. Of course, making deals in yuan is only half the battle. You also need a way to move the money. A core part of China's strategy has been the slow and steady construction of a parallel financial ecosystem designed to operate beyond the reach of Washington. The centerpiece of this system is the Cross-Border Interbank Payment System, or CIPS, launched as China's answer to the Western-controlled SWIFT network. CIPS is built to handle global payments in yuan. While still much smaller than SWIFT, its growth is explosive. In 2024 alone, the value of transactions processed by CIPS surged by over 40%. Every new yuan oil deal feeds this system, making it stronger and more resilient. Beyond CIPS, China is using other tools to chip away at the dollar's dominance. It's opening up its domestic commodity markets. For instance, in a strategic move, China now allows foreign investors to trade futures for critical materials like lithium and nickel, but the transactions must be in yuan. The message is clear. Whether it's oil from the Middle East or battery metals for the Green Revolution, Beijing is determined to use its immense buying power to force a global shift toward its currency. This is a monumental effort. But who do you think has the upper hand? Is the dollar's reign too entrenched to be toppled, or is China's strategy destined to reshape the financial world? Let me know your thoughts in the comments below. Section 5. A world in transition. So, is the dollar about to collapse? The reality is far more complex. In a fascinating paradox, even as the de-dollarization narrative gets louder, the dollar's actual usage remains incredibly resilient. According to data from the SWIFT network, the dollar's share of global payments actually hit a 1-2-year high in August 2024, accounting for nearly half of all transactions. This tells us that the dollar's deep, liquid markets and decades of trust give it an inertia that is incredibly hard to overcome. The more likely outcome isn't a sudden dollar collapse, but the slow rise of a multi-currency world with competing financial blocks. We are already seeing a bifurcated oil market emerge, one priced in dollars for the West, and another growing market priced in yuan for China and its partners. This transition is creating a fragmented and unpredictable world. In a strange twist of geopolitics, the very sanctions designed to punish countries like Russia have accelerated their pivot away from the dollar and directly into China's financial orbit. By trying to defend its dominance, the U.S. may be inadvertently fueling the creation of the very system designed to challenge it. The global financial system is like a massive oil tanker. It does turn on a dime. The US dollar isn't going away tomorrow. Its role is too deeply woven into the fabric of the world economy. But what we are witnessing is the slow, deliberate, and undeniable start of that turn. Through its relentless demand for energy and its strategic partnerships, China has laid the tracks for an alternative path in global trade. Each yuan-based oil sale, each new country that joins the currency swap network, chips away at the foundation of the petrodollar system. A world where the dollar is no longer the undisputed king would look profoundly different, both economically and politically. For those in the West, it could eventually mean a weaker currency, stickier inflation, and a higher cost of living. The arrangements of the 1970s created a unipolar financial world. Now that world is beginning to fracture. The question is no longer times if asterisks. The global financial order will change, but how fast and what will rise to take its place? Thanks for watching. If you found this analysis useful, be sure to subscribe and hit the notification bell so you don't miss our next deep dive.